And we're joined today by Alexander Joyce of Rejoice Financial on the money. And we've got a question right now facing a lot of us. I'm out of the market right now.
Sure.
But where should my money go if I'm out of the market?
Yeah.
Bonds are kind of a double-edged sword.
They are. And I think that you're not alone. I think that when people are, in the middle of this mountain concept, they're climbing, and the top of the mountain is retirement, and you stick the American flag out and you look out and you have that ultimate moment of I won, right? And the heart is this kind of the acronym of Mount Everest is not easy, but it takes a lot of training and adrenaline to climb, but most people fail and die coming down, right? Not going up. And so we have to understand that the ultimate, when you get out of the market, first, please understand that's an easy decision. The hardest thing to do when you're thinking about getting out of the market is getting back in, right? And so we're certainly not market timers, right? Mm-hmm. We believe in valuations, and we understand that. And what we see a lot of people doing, kind of like maybe yourself, and where should the assets be when they're getting out of the market, we have to first understand that how bond values work, right? And where we're at in an increasing interest rate environment. Rates have been dropping 40 years, and now they're starting to come back up. I'm not saying they'll go back up over 40 years, but I do know that Fed hasn't promised yet, but there's a projection that interest rates will go up another 3% by end of fourth quarter.
Wow.
Now, what we must understand is that when rates go up, bond values go down. They are 100% inverse. So what most people do is they get out of the market and they go safe, or they go to bonds. But what they have to understand is if they go to bonds and the bonds are long, or they have a long duration, because they're debt securities, if rates go up between that duration, they still lose principal. Mm-hmm. So the question is that money safe? And the answer is no. Mm-hmm. And so getting proper advice on what are the safe asset classes and where should that money go, is preservation truly the key? Do we need liquidity? When do we need access? Is the money is it designed to live off of? Because what we don't want to do if the market drops down 20% is live off 10%. Now we got a loss of 30%. That's called outliving your money, right? And so we just need to again, you're not alone, but we need to make sure that we're doing the best thing for the client, and we're advising and educating and doing what's prudent.
So if I need that advice, how do I get a hold of Alexander Joyce?
Call me. Okay. Call me. Simple as that, George. Just give us a call. Let's have a conversation, see if we're a good fit. That's it.
Alexander Joyce, Rejoice Financial, folks.